Hello everyone, welcome to the SBI Securities Weekly Market Podcast with me Sudeep Shah. Hope you are having a fantastic weekend. Now today we would be discussing about what to expect in Nifty and Bank Nifty from here on post this big bang rally and what are the key levels to watch out for. We would also be discussing on key sectors and stocks that could make a move from here on also in the coming few sessions. Now, what an eventful week it has been. An early Christmas celebration on the Dalal Street with Fed acting as a perfect Santa. What we've seen in the last week is that this entire buying momentum in Nifty and Nifty's ability to scale up to 21,400 levels with ease has been supported by a strong move in the IT stocks. And this has led to both the indices these days, Nifty as well as Bank Nifty, both have closed with 2 to 2.5% gain on a weekly basis. And the stock specific theme has really worked well, where a lot of sectors have participated in the up move in the week gone by. As I just shared earlier, IT stocks have outperformed for the week, gaining 7%, followed by the CPSE, PSU banks, and metals, which have gained by 5% for the week. Now, obviously, there would be one question which would be there in everyone's mind, that with the markets on a tear, how should we approach the markets from here on? Then the approach is very simple. Firstly, we should not try to predict any top in a market which is flushed with liquidity and avoid trying to go short because just because the levels don't seem acceptable to you or you feel that the markets have risen too fast. Secondly, use this opportunity to reduce the exposure in small caps or those mid caps where there is exuberance and have risen beyond imagination, and gradually concentrate on accumulating large caps which are now showing signs of outperformance. And this could even offer you some kind of a safety even in case markets consolidate or we witness a minor profit booking from the current levels. Thirdly, reduce over leverage positions, hedge wherever possible, and build new positions on dips and not at one go. Now, coming to the macroeconomic variables, if we see the main reason for the rally in the last week, it was the steep decline in the US dollar index and US 10-year bond yields below 102 and 4% respectively, post the Fed maintaining status quo on the interest rate front in the recently concluded FOMC meet. Even the S&P 500 has seen strong upside momentum in the last few sessions, and we feel that this index is now headed towards 4850, 4870 on the upside. Brent crude oil prices had dipped to $74-$75 but are now trading closer to $76-$77 per barrel. But even these levels are quite okay from an Indian perspective, and stability of the crude prices around this zone would be a big positive for the INR as well as the equity markets overall. Going forward, dollar index is approaching its July 2023 lows of 99.500 zone, which could act as a key swing support level, and we could see dollar index consolidating between 100 and 105 106 levels in the coming few weeks. Now coming to Nifty levels, with Nifty at lifetime highs, rather than searching for resistances, it's important that we look for supports and add good outperforming stocks on dips closer to the support zones. So the zone of 21,000, 21,100 will act as an immediate support from the index, and till the time index holds 21,000 zone, it could continue its up move towards 21,700, 21,800 levels. Now, profit booking below 21,000, 21,050 levels could be witnessed up to 20,800, 20,700 zone. IT stocks have already given a good breakout and have supported the Nifty in the last week, but now the focus would shift on large cap banking names as well as Reliance to support the Nifty move from here on. So these particularly if you say the large cap banks as well as Reliance will hold the key, and we need to track them very closely to build a fresh view on Nifty from here on. Although it looks positive, the structure is positive, but momentum in these names would be the key from here on. Coming to the option writing data, significant put writing has been witnessed in 21,300 and 21,200 strikes, while on the calls front 21,500 and 21,700 calls have witnessed considerable open interest additions. So basis this, we feel that the overall range for the next week could be 21,000 21,100 on the downside and 21,750 21,800 on the upside. Coming to Bank Nifty, now this index gained 2% for the week, witnessing a continuation of the up move that we had seen in the previous week. So the previous week's gains were 6%, add to that 2% gains in the current week. So in all, the cumulative gains have been 8% for the banking stocks or the Bank Nifty overall in the last 2 weeks. Going forward, the next immediate support for Bank Nifty is likely to be in the zone of 47,500, 47,600 levels, while the immediate resistance zone would be 48,350, 48,500 levels. Above 48,500 zone, a bigger short covering move is likely to be witnessed up to 49,100, 49,350 levels. On the other hand, in case this 47,500 support zone is breached, index could revisit its lower support areas of 47,000, 46,800 on the downside. Now, from a weekly expiry perspective, significant open interest buildup is witnessed in 48,000 and 47,800 puts, while 48,200 and 48,500 calls have also witnessed additions. Now, this implies a near-term broader range of 47,500 and 48,800, 48,900 for the banking index in the coming few sessions. Now, let's talk about few sectors and stocks that are in momentum, and actually they are not few, they are many, because the way markets have performed, we have seen a lot of broader market participation. And last week we saw stocks from the IT, cement, auto, NBFC, metals and capital goods displaying excellent momentum. Now, speaking about IT stocks witnessed excellent momentum with the likes of LTI, Mindtree, Techem, TCS, HCL Tech, and Infosys from the large caps moving well, while from the mid caps, Coforge, Emphasis, KPIT Tech, Birlasoft, Tata Elxsi, and LTTS too outperformed, and massive open interest additions on the long side was visible in all these names that we have mentioned, and that's why we feel that even in the coming week the momentum could be positive for these stocks. From the CPSE space, NTPC, REC, PFC, SAIL, Power Grid, and NALCO witnessed remarkable outperformance, and especially NALCO and SAIL, which have given a fresh breakout with a massive rise in open interest. Coming to capital goods space, stocks like ABB, Siemens, and Larsen, they have witnessed a decent build-up on the long side even at these higher levels. So we feel that quality names are still being chased and they should be on our radar. Cement pack led by Ultratech, ACC, Grasim amongst the large caps, and Star Cement, Sagar Cement, Heidelberg Cement from the mid cap space are expected to continue their outperformance in the coming week. If you see Ultratech as well as Grasim, they are on a multi-month breakout. So these names would garner interest at lower levels on dips in Nifty. Within the banking space, we've seen ICICI Bank and HDFC Bank show some kind of decent performance. But what was encouraging was the moves in the mid caps private banks such as RBL Bank, Bandhan Bank, Federal Bank, and PSU banks, especially, which have now regained their momentum with Bank of Baroda, PNB, Union Bank, and Indian Bank. Uh, we've seen a good momentum there, so we feel that this space should not be missed in the next week. Also, one should not lose sight of NBFC space, where stocks such as Indiabull Housing, Chola Finance, Manappuram, and L&T Finance have seen fresh build-up on the long side. So overall, apart from these stocks, just from a broader markets, if we see, bullish setups were observed in Kolpal, BEL, Exide, Dixon, and Apollo Hospital. And with the crude prices stabilizing and sustaining around $75-$76, even Asian Paints and Pidilite have seen some buying at lower levels. Now, friends, while we have been talking about bullish stocks, it's important that we discuss about the stocks which have been under pressure and aggressive short build-up is witnessed, so that we just don't make a mistake of adding them on dips just because they have not moved. Just to name a few, I feel that we should be avoiding bottom fishing in stocks like PI Industries, ICICI Pru, Maruti, Syngene, and Crompton, where there has been some considerable short positions being built. Now, coming to the FII and DII data, In the last week, in the cash segment, we had seen FIIs being net buyers to the tune of 18,850 crores, while DIIs have been sellers to the tune of 2,600 crores. FII's long short ratio for the index futures has strengthened further during the week gone by from 56% to 59.8% as they've added net fresh 14,200 contracts during the week. And even on the stock futures front, they've added closer to 6,300 contracts. So all in all, the data looks positive from a FII flow perspective, whether in the cash segment or in the future segment. Just to summarize, key support level for Nifty would be around 21,000, 21,100, and the current momentum could continue up to 21,700, 21,800, where there could be some resistance. From the bank Nifty perspective, support zone would be around 47,500, 47,600 levels, and index can further witness buying momentum up to 48,750, 48,800 levels, where there could be the next set of resistances placed. So friends, that's all for this week. Wishing you all an excellent weekend ahead. We hope you are enjoying listening to our podcast and are finding it useful for your trading decisions. Kindly do subscribe to our channel for such updates regularly and interesting insights, and also do share it with your friends and relatives. So until we meet again next week in this weekly podcast, happy trading, stay safe. Thank you, friends.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.